Welcome to the world of crypto. I am Abby from Mainstream Cryptos, which is a channel that provides you with all sorts of tasty information about crypto, blockchain, investing. We produce tutorials, we give you information on stuff that you might not know, like what is an altcoin, and what's more, every week we produce a newscast. That is right, every single week of the year. That's a lot of news. We produce this newscast to let you know what has happened every 7 days in terms of development in crypto across the globe. What's more, we do this for free. That means you don't have to join a kind of subscription list where you pay every month or pay every week or pay for us to do this work for you. We literally produce it and put it out there for you so that you can easily keep yourself clued in on what is happening. Doing this for free means that we don't ask payment from you. All we ask is that you do something that doesn't even cost you anything, not even time. We would love it if you can just like the videos that we work hard to produce and subscribe to the channel if you are interested in the content we produce, and turn on your notifications so that you don't have to miss a newscast, tutorial, or any of the hot tips that we send out. That's it. That's literally it. That's all we ask. So if you do enjoy these videos, please go ahead and like and subscribe. With that said, let's dig straight into our news for today. Top 15 facts for the week. Number 1. According to the XRP rumor mill, is Gensler leaving? The SEC issues a new update. Let's confirm. Gary Gensler, chairman of the SEC, is not resigning. The SEC's PR team has issued a confirmation quelling rumors of his alleged resignation within the XRP community. These rumors, amplified by prominent XRP accounts like Documenting Ripple, suggested that Gensler would be stepping down from his position due to an internal investigation. Such a move would be unprecedented, as no SEC chair has ever resigned before. Gensler, a veteran in public policy and academia, and former chairman of the Commodity Futures Trading Commission, has honed in on the burgeoning crypto market during his time at the SEC, most notably through the ongoing lawsuit with Ripple Labs, as well as recent legal actions against Coinbase and Binance. Gensler's resignation would be highly unorthodox, which is why the rumors were taken with a massive grain of salt within the XRP community. To be honest with you, I'm not entirely sure whether I should be rejoicing about that or not, since he does take a very hard-line approach to crypto, but it is what it is. On to piece of news number 2. Ripple unlocks 1 billion XRP from escrow, and here's the impact on the price. Ripple Labs Incorporated has released a total number of 1 billion XRP coins from escrow in a wave of 3 transactions. According to data insights from Whale Alerts, the first transaction occurred at 12 a.m. with a total of 300 million XRP tokens unlocked. The second transaction featured the release of 200 million XRP, while the last transaction saw the firm unlock a total of 500 million XRP tokens from its escrow accounts. The XRP release from escrow is a strategic business move designed to help cushion the liquidity of the cryptocurrency in circulation. What is the impact on price? The recent release appears to be taking a minimum toll on the price of XRP. At the time of writing, the digital currency is changing hands at a price of $0.4819 which means that it is down by 0.12% over the past 24 hours. That's a relatively minor slip in price compared to the magnitude of those releases. Number 3. These small Bitcoin whales continue to buy Bitcoin aggressively. A report shared by popular on-chain data aggregator Glassnode shows that shrimps, those are wallets that hold less than 1 Bitcoin, have been accumulating Bitcoin aggressively recently. On a monthly basis, they have been buying more than 33,400 Bitcoins. They have only 130 out of 5,264 trading days, which is 2.5%, recording a larger monthly position change, according to the tweet. There you can see the official tweet by Glassnode. Piece of news number 4. A judge orders Kraken to turn over user information to the IRS. Kraken has been ordered to turn over sensitive user information for clients that had transactions worth in total over $20,000 over the course of a year. The tax agency said it wants to determine whether crypto investors have been cheating on their tax reports. The IRS filed the initial court petition in the Northern District of California earlier this year, claiming that it had previously issued summons to the exchange in 2021 that the latter ignored. The agency also said it wants to check for tax liabilities for users transacting in the aforementioned amount between 2016 and 2020. This is what the judge said. I quote, "The court must determine whether the government's summons is narrowly tailored, that is, whether it is no broader than necessary to achieve its purpose. The court finds that to the extent the first three requests are aimed at establishing the identities of the Kraken account holders who fall within the DOE definition, the information sought in these requests is much broader than what is necessary to achieve that purpose for the vast majority of DOE users." End quote. Number 5. Now, this is very interesting. Over 60% of institutional investors appear bullish on crypto for the next 12 months. A new survey by Binance Research, which is the research arm of the world's largest cryptocurrency exchange, found that most institutional investors are optimistic about the outlook of cryptocurrencies for the next 12 months. Binance Research conducted the survey from the 31st of March to the 15th of May this year, with 208 global institutional clients and VIP users as the respondents. The respondents comprised a diverse mix of institutional investors with various levels of experience and assets under management. More than 48% of the participants had over 5 years of crypto investing experience. In the outlook category, 63.5% of the respondents expressed optimism for the crypto sector over the next 12 months. And when the time frame was extended to a decade, 88% of the surveyees indicated a positive outlook for crypto. Regarding allocation, 47.1% of the participants disclosed that they maintained their crypto holdings over the past year, while 35.6% increased theirs within the same period. About half of the respondents expect to increase their crypto positions with time, while only 4.3% would do the opposite in the next year. The respondents also expressed their belief in more real-world use cases and improvements in regulatory clarity, fueling the drive for crypto adoption. Approximately 27% demanded more real-world use cases, whilst 25.3% asked for regulatory clarity. What I find funny with these kinds of surveys is that the respondents usually are companies, organizations, individuals that are already invested in crypto, which means that interviewing them, you are likely to receive a positive approach to crypto because that is what fuels their interest in the industry in the first place. So to some extent, I find this type of data not to be particularly helpful because one has to think that the result is almost predetermined by the entities that you are conducting the research with. On the other hand, in order to gain valuable information and insights on the future of crypto, one has to interview or conduct research using entities that do know the market and have a valid ground for predicting the future. In any case, on to piece of news number 6. Solana eyes $20 mark after a 5% daily jump, and Bitcoin maintains $30,000. Bitcoin has calmed after the Friday roller coaster that it drove up and down by over $1,000 and remains relatively still at 30,500. The altcoins are also less volatile today, as it typically happens during the weekends, with Solana emerging as the most substantial gainer from the larger caps. Bitcoin went on a tear last week when it jumped from 26,500 to over 31,000 to register a new multi-month high. The bears tried to intervene but only managed to halt Bitcoin's price surge, and the asset remained stuck in a range between 30 and 31,000 for the past 7 days or so. That all changed on Friday following reports that the SEC could reject the most recent Bitcoin spot ETF applications filed by the likes of BlackRock, Fidelity, and the others, as they supposedly lacked critical information. If you want to know more about the initiative for a Bitcoin spot ETF, you can check out our newscast for last week. Bitcoin reacted with an immediate nosedive that took it from over 31,000 to a 10-day low of 29,500 on Bitstamp. However, the bull stepped up and pushed the cryptocurrency north shortly after, resulting in a recovery to 30,500 on Saturday. In the meantime, the altcoins also experienced impressive price increases over the past few weeks, with some standing out the most, one of which is Solana, which jumped by roughly 5% to over $19. Hooray for Solana! On to number 7. Litecoin's resurgence. The silver to Bitcoin's digital gold makes a comeback. Litecoin, which is often referred to as the silver to Bitcoin's digital gold, is making a remarkable comeback. This resurgence has been sparked by renewed interest from investors, driven by the recent listing of Litecoin and Bitcoin Cash on EDX Markets, which is a Wall Street-backed exchange launched on the 20th of June 2023. Litecoin is an altcoin founded in 2011 by former Google engineer Charlie Lee. It aimed to be the light version of Bitcoin that enables nearly instant and low-cost payments. Litecoin adopted the code and certain features of Bitcoin in its blockchain, but it prioritizes transaction confirmation speed to facilitate a higher transaction per second and a shorter block generation time. Litecoin in particular has recently re-entered the top 10 digital assets by market cap, experiencing a 27.74% increase in the past 7-day period. This surge has boosted Litecoin's market cap to $8.14 billion. Number 8. Solana Labs co-founder explores Ethereum as a Layer 2 solution for Solana. On the 2nd of July, Anatoly Yakovenko, the co-founder of Solana Labs, delved into the intriguing possibility of Ethereum functioning as a Layer 2 solution for Solana. Layer 2 solutions are bridge protocols that provide one-way security, and Yakovenko believes that Ethereum could potentially offer this for Solana. Yakovenko outlined via a series of tweets that in this setup, Solana asset holders on Ethereum would have finality guarantees, ensuring they could exit back to Solana even in the event of Ethereum double spending or creating an invalid state transition. To make this work, he proposed a 3-step process. First, submit all Ethereum transactions into Solana. Second, submit a simplified payment verification route for the resulting state. And third, implement a bridge timeout that would allow a fault to be proven. He also identified potential faults in this setup, including conflicting SPVs for the root, invalid root computation, which could be checked with Neon Labs Ethereum virtual machine, and censorship. To counteract censorship, a relayer would need to ensure that transactions posted on Solana end up in Ethereum. Yakovenko further explained that while it would be safe to hold Solana assets on Ethereum, it would not be safe to lend them or maintain positions against them. So essentially, while this idea is kind of in the pipeline at the moment, it does need some serious ironing out before it can actually become reality. With that, let us proceed onto our piece of news number 9. Oh, something tasty on Cardano. Cardano's Web3 wallets, pioneering financial inclusion in emerging markets. That sounds so noble. On the 3rd of July 2023, Input Output Global, which is the technology firm behind the development of the Cardano protocol, highlighted the transformative role of Web3 wallets on Cardano in fostering economic growth and enhancing financial health in emerging markets. Over a series of tweets, IOG explains that Web3, also known as the decentralized web, marks a shift from the centralized control of Web 2 to a more distributed, user-centric digital environment. This new landscape, built on blockchain technology, encompasses decentralized applications, decentralized finance, and digital identity solutions, all of which empower users and promote inclusion. Cardano, a blockchain that IOG describes as prioritizing decentralization, scalability, and sustainability, is at the forefront of this revolution. IOG states that Cardano aims to drive financial inclusion through its efficient smart contract capabilities. According to IOG, Web3 wallets on Cardano allow users to store and manage digital assets and provide access to a plethora of dApps and DeFi services. Lace is one such example of the growing list of Cardano Web3 wallets. IOG encourages those interested to learn more about how Web3 wallets on Cardano drive inclusion and explore the Lace platform by visiting the Lace website. And development number 10 for the week. Oh, it always gets interesting and a little bit warmer when we start talking about the SEC in the US. Crypto exchange Bittrex files a motion to dismiss a lawsuit by the US SEC. By submitting a motion to dismiss the complaint against it, Bittrex has advanced significantly in its legal struggle with the US SEC. Bittrex argues in its new court filing that the SEC doesn't have the jurisdiction to regulate cryptocurrencies as securities unless explicitly given the authority by Congress. It's a very interesting tack to take. Bittrex and its co-founder William Shihara were charged with running an unregistered national securities exchange by the SEC in April. The lawsuit alleges that Bittrex, without being registered as an exchange with the SEC, allows the trading of digital assets that qualified as securities under the US federal securities laws. Bittrex cited the challenging regulatory and economic climate in the US as the reason for its decision to shut down after the SEC lawsuit. Bittrex, though, has promised to fight the SEC's allegations instead of paying. Bittrex's request to dismiss borrows heavily from the strategy used by Coinbase, which is the more prominent cryptocurrency exchange. By following Coinbase, Bittrex seems to be making a calculated move to strengthen its joint defense against the SEC's investigation. Well, the developments there should be fun to follow. On to number 11. Okay, Binance. Binance Pay enables over 600 airlines to accept crypto payments. Over 600 airlines across the globe now accept payments in several digital currencies, thanks to Binance Exchange's Binance Pay service. Binance said that the new service was made possible by the exchange's partnership with Alternative Airlines. The latter is an online travel agency that accepts payments in more than 70 different cryptocurrencies and works with more than 600 different airlines. Here you can see a tweet by Binance. Book your next vacation using crypto and save while you're at it. As part of the partnership, all customers will get a 3% discount on bookings up to a maximum of $500. The Binance Exchange has taken the lead in encouraging cryptocurrency use beyond simple trading. Number 12. Continuing on the Binance thread, the crypto exchange Binance burns 2.65 billion Terra Classic. Binance has completed the 11th batch of the Luna Classic burn mechanism, burning 2.65 billion Terra Classic coins. So far, the crypto exchange has burned over 35.5 billion Luna Classic, while the community as a whole has burnt over 68 billion Luna Classic. The recent burn by Binance instantly elicits a 3% increase in Luna Classic price as investors react. 13. Okay, again back to regulation. Singapore regulator bans crypto exchanges from lending staking for retail investors. Singapore is enforcing new crypto consumer protection measures as the city-state continues applying regulation to its burgeoning crypto industry. Chief among the new measures, the Monetary Authority of Singapore, the country's chief financial regulator, will enforce a ban on lending and staking for retail customers, individual traders as opposed to institutional clients, a measure which has been on the table since last October. The regulator will also require that exchanges move customers' digital assets into a trust before the end of the year. This is to prevent an FTX-style scenario where their funds are commingled or traded. Yes, I think we all are familiar with the FTX tragedy. According to Hong Kong's new regulations, crypto firms have been given a 1-year trial period to open up shop in the territory. If the region's Securities and Futures Commission approves their operations at the end of the trial, companies will be free to apply for a business license. Let's talk about CBDCs. Apparently, CBDC skepticism is strong in Canada and England too. The two there referring to in addition to America. Two surveys published last week, one by hardware wallet manufacturer Trezor and the other by financial news site WealthRocket, examined public attitudes towards CBDCs in the UK and Canada respectively. Each one posed distinct questions, yet reached similar conclusions. People in Canada and the UK have clear reservations about the tech that central banks and governments across the globe are exploring as an alternative to cash. A majority of Brits said they were concerned about UK authorities having control over people's funds, while 39% of Canadians said a loss of control over their finances was a concern. There is a distrust of government in so many countries around the world, said Stephen Lupka, head of private clients and family offices at Swan Bitcoin. He said that to Decrypt in an interview. They don't want to just hand over unilateral control over their money to their states, which I might add is highly understandable. The studies follow research done by the Cato Institute, a libertarian think tank, that found only 16% of Americans support the adoption of a CBDC, with greater pushback among Republicans than Democrats. In America, presidential candidate Robert F. Kennedy Jr. has pointed to Canada as a reason to support Bitcoin. He said he was inspired to support Bitcoin after the Canadian government tried to quell protests against COVID-19 restrictions in the region by freezing protesters' bank accounts. That is quite extreme. Still, 59% of the 1,500 Canadians surveyed by WealthRocket said they were willing to use CBDC for payments. 25% said they were not willing at all. Canada's central bank, the Bank of Canada, has no plans to issue a CBDC anytime soon, but is exploring the technology in case Canadian Parliament asks for one in the future. That is according to its website. And lastly, but not leastly, and on a somewhat more positive note, number 15. Good old Hong Kong is embracing Web3 with a new task force. Authorities in Hong Kong announced the creation of a task force dedicated to promoting Web3 development. The news broke late on Friday via an official press release from the government of the Hong Kong Special Administrative Region for an initiative taking effect today. The group will have a 2-year period to do its work and is led by Hong Kong's Financial Secretary Paul Chan, along with other government officials and regulators. The task force also includes 15 non-official members, which include several industry experts. The territory's Financial Secretary Chan has been notoriously pro-crypto, with claims earlier this year that Hong Kong needs to seize the golden opportunity that Web3 presents. Beautiful! Some people love crypto, some people hate it. That is just honestly the way it goes with anything in this world. But I do believe there are serious indications, as shown by that one global survey, that many hold the opinion that crypto is the way of the future. I must personally say that there's strong evidence to suggest that, just looking at digitalization in general. Just look how developed countries have gone from cash to bank accounts and cards, instant EFTs, the world of digital finance. And we have to ask ourselves, what is the next step? There's no way we're going to stop here and freeze for the next 100 years. There is a next step. And if we look at things globally, the world is taking a step into crypto. On that note, we're going to sign off for today. Thank you for joining us for the weekly newscast. Don't forget to like and subscribe, and I will be seeing you next time. Stay #Safu.